Welcome. This is A.K. Asnani from Smart VRC Bhopal, and today's webinar number is 99. Yes, it is almost a year has gone by when we started our first webinar, and today is the webinar number 99. And of course, we are celebrating 21st year of Smart VRC. So today's topic is steel and allied sectors. So what we are going to discuss in this presentation is why steel prices are rising. Is steel production process, international steel producers, key players in India, and the associated sectoral stocks. So as usual, most of the times we start with a poll, and this time again with a poll. And the question is, during last 6 months, steel prices are up by how much? Whether it is 20%, 30%, 50%, or 100%. Now, on your screen, you can select the option. I request all of you to participate so that make it exciting, make it more realistic. So 10 seconds are left. So here we go. Let's see the results on your own. 20% of the participants, no, sorry, 5% of the participants say that the rise is up to 20%, and 21% of the participants have voted for 30%, and the maximum 42% have voted for 50% rise, and 33% say that it is up to 100%. So let's see what is the right answer. So here is the global steel prices during last 12 months. And these are the prices. As you can see, about a year ago, it was 3,500. And now it is presently about 5,200. This is in metric tons. This price is in metric ton. And the price is for, in terms of the Chinese currency, yuan, Chinese yuan, renminbi. So the prices are up by about 50%. 50% is the correct answer. Immediately, it is being followed by poll number 2. Tata Steel is amongst the top 3 steel producers in the world. Is it correct or not? So it has been enabled. You can choose the right answer as per you. What is the right answer? Tata Steel is amongst the top 3 steel producers in the world. Yes or no? Still 10 seconds are left. 84% of the participants have voted. Still, now it has become 86%. So here we end the polling, and the answer, 78% of the participants say that yes, Tata Steel is amongst the top 3 steel producers in the world, and 22% say no. Now here you will be surprised with the results, and soon I will share the results. But do remember, the question was Tata Steel is amongst the top 3 steel producers in the world. So here is the global ranking in terms of the metric tons per annum capacity for for 2019, and Tata Steel comes at number 9. It is not among the top 3. In fact, Tata Steel's capacity was less than 1/3 of the number 1 player, and it was about 60% of the number 3 player, that is Nippon Steel. The number 1 place is occupied by ArcelorMittal, and the country is Luxembourg, and the capacity was 97.1 metric tons per annum. The second one was the Chinese company, third is Japanese company, fourth is again Chinese, fifth is South Korea, sixth is China, seventh is China, eighth is China, ninth is India, that is represented by Tata Steel, and 10th is again China. So how many Chinese companies are there? 1, 2, 3, 4, 5, 6. Out of 10, 6 companies are from China. And not only they are from China, but they have very big capacities. Even the biggest Chinese company has more than 3 times the capacity of Tata Steel. So that is the picture. And as you can see, China, India, and Japan, they have occupied, I think, about 70% of the total world market. So Asian countries, Asia has occupied 70%, more than 70% of the steel production at global level. Now, as far as the top 40 companies are concerned, it was the first screen, the previous screen, wherein I showed you the top 10 companies. So the dominance of the Chinese companies is not only restricted to the top 10 companies, even in top 40 companies, more than 50% are from China. So the next in line is China has got 22 companies in top 40. Russia has got 4 companies. India has got 3. USA 2. South Korea 2. Japan 2. Germany, Luxembourg, Taiwan, Brazil, and Argentina, 1 each. So that gives you a very decent perspective which countries are dominant in the steel sector, not only in terms of the number of companies, but also in terms of the capacity. Basically, there are 2 ways to produce steel. Number 1 is blast furnace, and number 2 is electric arc furnace. First, we'll consider the blast furnace route. As the name itself indicates, there has to be a blast furnace, and we'll see how that blast furnace is used for producing steel. Why this route? So the raw material is coal, iron ore, and limestone. These 3 items are mixed and they are sent to the blast furnace, and blast furnace produces the pig iron, and pig iron, and in addition to the scrap, iron scrap, they are again sent to the basic oxygen furnace, and that is how the steel is produced. We are not very much concerned about the process, but we are very much concerned about the raw material and the output. So that is how the steel is produced. And also the important thing is the emissions. So it is a blast furnace. Naturally, there has to be a boiler, and there has to be a lot of emission, lot of heat generated in the blast furnace. And also there are impurities in iron ore which has to be removed and which are thrown out into the environment. So for the time being, we are into the process of the blast furnace steel making, and as we have seen in the previous slide, we have mixed coke, that is the coal, iron ore, and limestone, and that is here is the blast furnace. Here, as I have said, this is scrap iron and pig iron are produced, and then they are further processed, and then they are converted into various shapes like slabs, beam, bloom, and they are further classified. They are further processed into various shapes. Further down the line, other shapes are produced, like as you can see, there are many things that, like cold rolled sheets, that is a CR sheets, hot rolled coils, and then wires, and there are even the welding rods. So there are various, depending on the application and depending on the requirement, they can be shaped into different forms. Other process is electric arc furnace. So the first process was blast furnace, and the second one is electric arc furnace. Electric arc furnace is the now is gaining more importance because of the less pollution. It creates less pollution compared to the blast furnace, and this is the way to produce steel here. Now here these are the three black rods. What you are seeing are the graphite electrodes. And the moment I say the graphite electrodes, then I'm very much sure most of you must be able to recall the graphite electrode manufacturers in India, right? Okay, we will discuss further that later on. Then it is through the electrolysis process that the electric arc is produced between the electrodes, and this arc produces heat, intense heat, and that heat melts the iron, melts the raw material. And when there are outputs to remove the slack, that is the waste on the which appears on the top of the molten bath. And also there is an arrangement, as you can see at the bottom, to tilt this whole electric arc furnace so as to take out the steel. And also you can see these bricks are nothing but the refractories, and also there are listed companies in the refractories in the Indian stock market also. And this is the whole process for electric arc furnace. So in blast furnace, there are some environmental concerns. So why there are environmental concerns? Because there are impurities in the raw material like nitrogen, silicon, sulfur, phosphorus, and even excess carbon. Carbon is in fact desirable property in the steel. It depends what kind of alloy you want to produce. So accordingly, that much amount of carbon and other metals are mixed to produce that desired quality of steel. But excess carbon is not desirable, and these are removed from the sourced iron. While in the process of removing these are emitted into the atmosphere, especially the carbon-related gases, and those are very, very dangerous from the environmental point of view. And as per one study during last year, that is 2020, steel making is estimated to be responsible for about 7 to 9% of all direct fossil fuel greenhouse gas emissions. 7 to 9% of the total greenhouse gas emissions is because of steel. So that is a very great concern. Now we are coming to the share price of the steel companies to show you how they have moved during the last 20 years, 21 years, how they have moved. And as you can see, this chart is from 1st of January 2000 to till date. And if you ask me to show any trend, I cannot show you any trend. There is no trend, and it is just going up and down. And in fact, the highest peak till date for this duration was near to rupees 1000 for Tata Steel shares, and that was in 2008 boom times. And once again, we are very near to that peak, but there is no trend. So now you must be able to appreciate the fact that it is not like a growth stock, or it is not like in fact, I would say it is not like a growth sector, because of the Chinese dominant, especially during the last 5-6 years. And because of the China's dominance, steel prices were low. But of late, what has happened is China has imposed very heavy restrictions on the emission of the gases through the blast furnace route. And that is the reason why there is a production cut has been enforced on many of the big companies in China. But still the output is high. And you must have also heard, you must have also read I think yesterday only, that Chinese economy has grown at the rate of 18% Yes, 18%. So China itself is a very big consumer of steel, and that explains why the steel prices are moving up. So this is the chart of share price chart of SAIL, and in fact, if you ask me the trend, so from last, at least from last 12, 13 years, it is a downward trend. And even before that, if you see in totality for last 21 years, once again, I don't see any trend, and the same is reflected in the share price. As I say, in the long term, share price is a reflection of the company's financial performance. So steel companies, they do well during the good times, but as the times turn, so their performance also turns bad, I should say. And this is the share price of JSW Steel. Definitely this company is doing pretty well. And if you look at the financial numbers, you will appreciate that why there is a clear growth track for this company, JSW Steel. And it is way, way higher than what it has made a peak in 2008. And not only in 2008, in fact, during 18-19 also, it went beyond 400, and now it is 600 plus. So that is JSW Steel. So what is the basic characteristics? Now, before investing into the steel sector or the steel companies, I would like to warn you, this sector is way different from the market. As I've shown you in the share price charts, it is very difficult to correlate with the Sensex because, as I said, they move in cycles. Steel cycle has its own way of moving up and down. And of late, during the last 5-6 years, China has made a big interruption in this cycle. So it is no more a normal cycle. And it is a specialty of the commodity companies, commodity sectors, that whenever the going is good, you will find the P ratio is low. So don't get attracted by low P ratios. If you want to invest in a steel company or in any commodity sector, then you should be able to at least to have a rough idea where you are in that particular commodity cycle. Because low P is not the reason to invest. You will take a very strong beating if you are investing based on low P ratio. It is not like other stocks. It is not like other growth stocks wherein low P gives you a good opportunity, because that is a growth stock that its performance will keep on improving year after year. Even if you made a mistake in timing the stock, soon your mistake will be mitigated because of the good results from the good growing results from the growth stock. But that is not the case in case of steel companies. That cycle is pretty long. Cycle is 7 to 8 years. And if you are wrongly caught in this cycle, then you will have to wait for very, very long time. Otherwise, you will have to book a loss. So be very, very careful. Steel company characteristics, the first one is low P during peak times. So that is the one quality. Second, it is very difficult to predict the cycle. As I said, in general itself, it is very difficult. And in case of steel, because of the Chinese dominance and Chinese policies, it is really very difficult to predict where we are in the cycle. These companies are highly capital intensive, and that is the reason why all of these companies, you will find that they have very high interest, and they pay a lot of interest, and they have very high level of debt on their balance sheet. But as soon as these companies turn around, and you will find that the profitability jumps like anything, and so much is the profitability that they can repay their debt maybe within a year, within 2 years. Yes, that is possible. But again, as I said, it is very, very difficult to predict. They are highly leveraged, as we have seen, because of the being capital intensive nature. And domestic steel prices are highly aligned with the global prices, despite the fact that they are very voluminous and heavy also to transport, but still the steel prices are dictated by the global steel prices. And environmental concerns, we have already discussed how they impact the environment and how it is making a difference in the output. We are taking a small, I can say a small break. It is not a break actually. I would like to introduce something about the smart reports. This is not our regular product, smart reports. Occasionally we come out with a stock research report under this smart reports, and most of the times it is a part of smart multibagger. And yesterday also we have launched one smart report under smart multibagger. And about this smart report, this is stock which we have covered yesterday. It is only a one stock. It is a large cap company, and stock price is below rupees 3,000, and target gains are 131% in a period of little more than 3 years. Risk is pretty low. It is a very good company, a growing company, and solid management, and it is making the very right steps. And the price of the report is 750 rupees only plus GST. For my subscribers, I would like to clarify that they need not have to subscribe to this report for any of the products subscribed, because we have covered this stock over a period of time, over during last 6 months or last 1 year. We have covered this stock in all the products, so subscribers need not have to subscribe to this report. This is a one-time report, and this stock will not be reviewed in future. Neither you will receive any notifications about this stock. We have provided all the target, stop loss, holding period, everything. So you will have to track at your end. And if you wish to subscribe, you can go to this Smart Academy. In the top, you can see Smart Academy. Under Smart Academy, there is a link with the name of Smart Report. And as you scroll down, you will find the subscription details you need to fill. And once you subscribe, immediately, automatically, the report comes into your email inbox. You wait for a couple of minutes and it will come through email. It will be in the PDF format. So this was all about smart report. And we request all of you to invite your contacts, invite your friends who are struggling to make money in stock market. And it is not necessary that he has to subscribe to our products. Even we can include him in our WhatsApp groups so that he keeps on getting regular messages from our end regarding the long-term stock investment strategy and how to create wealth with a long experience, my own long experience of more than 31 years and successful experience. And so those who are interested can send the request at this number. This is the WhatsApp number, 9755920780. So coming back to the presentation of the steel and the associated sectors. What are the associated sectors? So the first thing, what we saw, the 3 electrodes in the chart, in the pictorial you have seen in case of electric arc furnace, right? And I'm very sure you all must be knowing the companies HEG and Graphite India, which are the companies in India which manufacture graphite electrodes for EAF, that is the electric arc furnace. Again, this is a very proprietary type of technology, and worldwide there are only 6 or 7 big companies who are manufacturing electrodes, and 2 of them are in India. But here again, I would warn, be very careful. These stocks are highly volatile. We'll come back soon in the forthcoming, in the next few slides. I will show you how much volatile these stocks are. So that was all about graphite electrodes. The second was the refractories. Refractories are used to provide the insulation, and in the leading companies in producing refractories in India are IFGL Refractories and Vesuvius India. Also, some oxygen is used to remove the impurities from the steel, and these are clubbed under the industrial gases section. There are three major companies under this head. There is the Linde India, Refex, and National Oxygen. But industrial gases, they not only provide oxygen or other gases to steel, but they also provide to other companies, other sectors also. So that is not the I can say that is not something like that 100% of their output is given to the steel sector. Like in case of graphite electrodes, 100% is given to the steel sector. Now this is the HEG. As I was referring, Graphite Electrodes, HEG and Graphite India, two companies are there, but see the kind of volatility. On 1st of January 2017, the share price was something about rupees 200, 1st of January 2017, right? And by the mid of 2018, share price went up to 4,500 rupees. So within a matter of 18 months, share price multiplied 22 times, more than 22 times. But the fall was equally steep. As you can see, those who purchased at 4,500 are still way far below their purchase price. Currently, the share price is about 2,500, not 2,500, about 2,300. And that 2,300 itself is more than 4 times up from almost a year ago price. So that is the kind of volatility in case of HEG. Not only in case of HEG, but in case of Graphite India, it has a very much similar chart. You can see this is HEG and this is Graphite India. Almost same kind of volatility, high level of volatility. So be very careful while investing in these companies. Coming to the smart world, successful investing is about managing risk, not avoiding it. So if you have the art, if you have the experience of or the knowledge of surfing this kind of cycle, steel cycle specifically, then you can definitely have a small allocation in your portfolio about this steel. And if you don't know anything about the steel sector, then be very cautious, and I would not advise you to invest in these companies. Be very careful. Yes, it is very much possible that even from the current levels, stock prices may go up and may go up substantially. No one knows, but the downside risk will also be equally great. So whatever we have discussed is just an analysis of the steel and associated sectors. This should not be construed as a advice to buy or sell the stocks. Now, after this presentation, there will be a question and answer session, and participants are requested to write their queries in the chat box with their name, and also they can raise their hand, and I will ask one by one to unmute yourself. Thank you very much for your valuable time, for your patience. So if you have any query, you can write in the chat box, or you can raise your hand. So where are we as per you in commodity cycle? I am not expert in finding the commodity cycle, but one thing I would like to share that there are other reasons also. It is not only the China who is putting the restrictions on the environment because of the environment concerns. It is also because of the lot of stimulus being provided worldwide, not only in India but also in US and other countries. And even US is going to invest a lot of money on infrastructure. India has already shown its keenness to invest on road infrastructure and other infrastructure facilities, and all these infrastructure facilities means the demand for steel is going to move up, and already the inflation is also moving up. So as I said, I'm not an expert in predicting the cycle, but definitely I can say that this is not the peak. That is what I can say at most. But be very, very cautious. As I said, I'm not an expert in predicting the steel cycle, but don't have a big exposure in your portfolio from this sector or associated sectors. Why we are not participated in this sector? We have participated, sir. In Smart Gains, we have recommended a steel stock last time only. And if required, we will definitely will advise on more stocks. I would like to refrain from providing you the stock advice. Most of the queries are coming from knowing the prospects of the company. So company specific queries, kindly restrain. Is there it's there related with coal, because coal India not moving up frequently coming down. Okay, coal is not fully dependent on the steel sector. There are a lot many other applications of coal in thermal powers, in other metals like copper, aluminum also. Coal is used also in cement plants also. And in general, as I said, the coal produces the gases which are harmful for the environment, and so the companies are avoiding using coal. And in fact, we have discussed how blast furnace is being replaced by electric arc furnace. So, and coal again a public sector, and from last many years, I don't think the company has improved any, has shown any major improvement in its performance. Views on green energy prospects. Definitely green energy prospects are very good, but at the same time I would like to say that presently the power demand supply gap is not there, and in fact, as far as the demand is concerned, the supply is more than the demand. So presently there is nothing like that. The power companies are doing, power generators or power equipment manufacturers are doing very well. It is not like that. But I hope in the coming 2-3 years, there will be a demand, more demand than the supply. What sources you are referring to for studying industry and stock valuation analysis? As far as the stock valuation is concerned, what sources you are using for stock valuation analysis? Stock valuation is a very specific, person specific. So what kind of technique you use, it depends on that. And we have discussed many techniques during last 1 year on these webinars. Also in seminars and workshops, I have discussed many techniques as to how to value a stock and what parameters are to be looked upon to ensure the soundness of the fundamentals. And as far as the industry dynamics is concerned, there is no single source. And in fact, there are some very reliable websites you can refer to. And one of them is tradingeconomics.com, that gives you a good data about not only about the commodity price movements, but also about the players in the industry. Tata Steel versus JSW for short term. I'm really very sorry, sir. We are advising only for the long term, no short term advice. So, what is your opinion on other metal sectors like copper or aluminum? Copper and aluminum. Copper and aluminum prices are also up. And likewise, as we have discussed for the steel sectors, you can find out what are the companies in this sector and what are the Indian counterparts and how, what kind of capacity addition they have done in the recent past and what is their debt level. These are not as capital intensive as the steel sector, but nevertheless, they are capital intensive. Bajaj Finance views on long term as corona cases increasing rapidly. Is there any impact on NBFC? As far as the corona cycle is concerned, my knowledge is as good as yours, and no one can predict when this cycle will peak out. And in fact, last time you might have seen that even before the cycle, corona cycle peaked out, share price bottomed out. First, the share market bottomed out, and then the corona peaked out. So don't try to predict anything. Even last year, lot many predictions were there regarding the India's how much of the population will be impacted by this and that. Everything was there, but I don't think anything has come true. And same you may be surprised this time again. And we can only pray that we should get a relief from this corona as early as possible. Mr. Sandeep Soni, kindly unmute yourself.
Good evening, sir.
Yeah, welcome. Yes, sir.
Sir, my question is, as you said, the prices of steel and other commodities, that is copper and aluminum, are increasing. So the metal incentive sectors such as automobile, what will be the impact on these sectors, automobile particularly?
Definitely, as you have seen that these auto OEMs, they are raising the prices almost every month or every 2 months. They increased in January, and recently also some companies have raised their prices, vehicle prices. It is going to have an impact on the uh, final price of the vehicles.
Okay, which other sectors will impact this rise in metal prices?
So it depends. Means as far as the in transmission towers, they use the steel. So, and it is not necessary that every time it is going to have a negative impact. Many times, like in transmission tower, it is a contract. So maybe the raw material price, a kind of price rise impact is already into the contract. So it all depends on specific company or specific contract wise.
Okay, thank you, sir.
This impact will be uniform. So if there are 10 number of companies in automobile in producing passenger cars, and if the steel prices are rising, then it will have an equal impact on all. But the problem is that demand may suffer because already people are uh, not happy, and not only happy, but people are suffering, and they are again very cautious. They may see once again, they may see the salary cuts or something like that. So they are not in a mood. They may not. The mood may change. I mean to say, and that can have an impact. But it all depends how long this corona cycle prolongs. But at this juncture, it is very difficult to say. Moreover, if you are a long-term investor, it is not going to have a much impact. It is only a short-term impact.
Okay, thank you, sir.
Thanks. Views on packaging. Packaging is mostly used for FMCG companies. I presume that you are asking for FMCG companies, and packaging is not going to have a much impact. And packaging, if they are using films, whose raw material is the crude oil, derived from crude oil, then crude oil is stable. And from last 1.5 months, 2 months, crude oil is stable. Will there be increase in demands? Increase in demand for packaging? I don't see like that, because there are factors which are in favor of packaging. There are also the factors which are not in favor of increasing demand for packaging. Views on pharma, we have, you must have observed that most of our basket of stocks are doing pretty well despite the sluggishness into the stock market, and that is because of the pharma companies only. We had a good allocation of pharma stocks in our portfolios, and I believe that at the present juncture, pharma companies, especially the mid-cap pharma companies, are offering good value proposition. How we come to know when peak is happened? Sorry, sir. Please explain it further. Will government be successful in divestment this year? I cannot say. It all depends. It is very difficult question to answer. Will government be able to achieve its target of disinvestment? Cannot predict. So what we have to do is we have to be prepared for it. And when the opportunity arises, we have to encash it. That's all. We cannot predict anything, that where the steel prices will go, where this share price will go. I can't say. What I can say is, suppose there is a company with the name of XYZ, and in my opinion, the share price is about 10% below the real worth. Now, what I will do is, if the share price moves up by 15%, I will sell that stock. If the share price moves down by 15%, I will buy more of that stock. So that is the way I operate, and I advise to my subscribers. And this works every time. And that is the reason how we are able to achieve 26% CAGR in SBP from last little less than 20 years. That is the only way. We have to be prepared for both ways. Don't always predict. Try to predict that market should. Try to think that the market should always go up. Not like that. Be prepared for coming down also. It cannot happen that market will always go up. It has to come down. It has to come down and then go up. But in the long term, it will go up and substantially up. That is given. So what is not given is whether the market will come down substantially. If it comes down, then grab that opportunity. That is the way to create huge wealth in the long term. Tata Motors, it is too early to say, because during last 3-4 months only the sales are rising, but it is too early to say, and share price is already discounted that thing. So until there is a sharp correction in the share price, then only you should enter. But because from the short to medium term point of view, all the good news is already captured in the stock price. Citibank withdraw benefits which companies? All banks will be benefited. What about IT sector? IT sector will do well. There is only a temporary phase that market was expecting much more from the IT companies. That is the only reason why there is a small correction in the IT stocks. Otherwise, IT will do well. So with this, we come to the end of today's session. Thank you once again. Bye-bye.